Hello friends, welcome to Bankers Platform. So friends, today we will be discussing guidelines on taxation and TDS on foreign remittance. So this video will be very helpful for certificate course in foreign exchange exam and foreign exchange facilities for individual exam. So two exams are there in that this topic is covered, and it is very important topic. And if you're preparing for, if you're understanding and have a complete knowledge about this topic. So in the exam, you can score 2 to 3 marks. 2 to 3 marks will be there from this topic, and that you can easily score because topic is very, very easy to understand. So let's start. So what is foreign remittance? That everybody of you know. So as a banker, everybody knows what is foreign remittance. So foreign remittance is simply the transfer of money from a person or business in one country to a person or business in another country. So whether you are sending funds for education, medical treatment, business purpose, or family support, it qualifies as foreign remittance under Indian foreign exchange regulation. So Indian residents, they are allowed to remit up to $250,000 per financial year for various purposes. And NRIs are allowed to remit up to 1 million US dollar per financial year, and subject to certain conditions. So what are the common types of uh, this remittances are there? So first is educational expenses. This is the very common for studying abroad, that from India, people are sending money outside. Other is medical treatment overseas, family maintenance and support, business and investment purpose, travel expenses, gifts, remittance to relative abroad, property purchase in certain countries. So these are the like common type of foreign remittance that are being sent. So why remittance tax matters for NRI? So tax implication can significantly impact your financial planning, especially for large transfer or regular remittance. Okay, so who is NRI? NRI means non-resident, a person, a citizen of India residing outside India. So he will be called non-resident Indian. PIO, person of Indian origin. So a foreign citizen, other than those from Bangladesh or Pakistan, who at time held an Indian passport or whose parents or grandparents were Indian citizen or is a spouse of such person. So they will be called as PIO, person of Indian origin. So here I would like to tell you that you always remember that there is no taxation for NRE account. Okay. NRE account. I'm not saying NRI. This is NRE account. So if any NRI is having a NRE account, so in that case, there will be no tax because whatever the fund receive in the NRE account, that has come from abroad. So there is no tax on the NRE account. Like repatriation also, there will be no tax. Okay. And don't get confused with NRI. NRI is definition for non-resident Indian, but NRE is a type of account, and another type of account, that is NRO, non-resident ordinary, non-resident ordinary, and non-resident external. So these all we have already discussed in our previous video. So you can just go through that, and when you're clear with that, you will have no confusion. Okay, so remittance facility available. So NRIs and PIOs can repatriate current income from India, such as rent, dividend, interest, based on certification by chartered accountant regarding eligibility and tax compliance. So remittance can be credited to NRE account or to an overseas NRE account, subject to the satisfaction of AD PAN. So what are the regulatory framework? So remittance facility for NRI PIOs are governed by Foreign Exchange Management Act, that is FEMA Act 1999, and is its associated notification and amendment. So NRI or PIO can remit up to USD 1 million per financial year from balances held in NRO accounts, sale proceeds of asset or inherited asset, subject to payment of applicable taxes and documentation. So here also NRIs can send 1 million USD from NRO account. This you have to remember. from NRO accounts. Okay, here we are not talking about NRE. So only this restriction is available in NRO account, because whatever the fund, whatever a NRI person or PIO person having any income from India, like rental income, he is having interest income, he is having dividend income, or he has sold his like property, and from that he want to send that money. So these all type of transaction will happen in NRO account. So after that, he will use the NRO account to send the funds abroad. So that time, the restriction is up to USD 1 million per financial year. This is the rule. Okay. So what is the importance of remittance tax compliance? So TDS is tax deducted at source and TCS is tax collected at source. So remittance may be subject to TDS or TCS depending on the nature and purpose of transaction. So reporting requirement. So proper documentation, including Form 15 CACB, is required to ensure that remittance comply with Indian tax laws and avoid penalties. Okay. And repatriation of asset. So tax compliance is essential for the repatriation of assets, especially when selling property or transferring large amounts. So special facility for student. So student going abroad for studies are treated as NRI and are eligible for all remittance facility under FEMA. So for all NRIs, they can receive up to $1 million per financial year from India and including maintenance and education expense. So why does this matter? So legal compliance is required, financial planning, transparency. So why you need to pay the tax, why it is there? Because you have to ensure that NRI and PIs don't face legal issue or penalty. So if anybody is sending, he won't want, they won't want that they want to get legal issue or penalty. So they don't want, so they have to comply all the rules. Financial planning. So help optimize tax liability and maximize amount. So suppose a person is there and he has not filed the like the file the tax on the foreign remittance. So later on, when the tax authorities they will get to know. So what they will do? Suppose he has to pay 10,000 rupees. He had to pay 10,000 rupees, but on getting any penalty and legal issue, he may have to pay at the place of 10,000. He may have to pay 10 lakh rupees due to the penalty and all. So avoid these type of situation. This taxation is required in a transparent way and transparency. So facilitate smooth transaction and build trust with financial institution. So is foreign remittance taxable in India? So foreign remittance taxation in India is governed by Income Tax 1961 and LRS as regulated by RBI. So rule differ based on whether the remittance is inward or outward. Okay. So here outward remittance. Outward remittance means when you're sending money abroad. So tax collected at source. So that is TCS. So when a resident individual remit money to NRI bank account abroad or in India, NRE, NRO under LRS, a specific percentage is collected. So this can be a person also, this can be a institution also, like for education purpose or for medical purpose also. Okay. So these are the, this is the rate that is right now applicable. So today, this is October is going on. Okay. So we are having the video on October 2025. In this month, we are making the video. So the guidelines will be applicable till this day. Okay. So LRS for education from financial institution. So if any payment is being done for education loan, okay, education loan, LRS for education loan. So there will be no tax. Okay. There will be no tax will be there and tax will be there that is missed here. That is half percent. Okay. Half percent tax will be there when somebody has taken education loan and they want to make the LRS transaction under LRS. So right now, 10 lakh is the threshold limit. 10 lakh is the threshold limit that up to 10 lakh, no tax is there. No, sorry, no TCS is there. Okay. No TCS is there up to 10 lakh rupees. If somebody want to send money abroad, so up to 10 lakh, no TCS is there. If it is above 10 lakh, then half percent will be deducted if it is a amount from a education loan. Okay. And LRS for education fee other than bank finance. Other than bank finance. If bank finance is not available, then 5% TCS will be applicable above 10 lakh. Okay. For medical purposes, 5% above 10 lakh. Okay. For LRS other purposes, 20%. Like somebody want to send in family maintenance. Okay. They want to send money for family maintenance, or they want to send money as a gift. Okay. So in that case, 20% tax TCS will be applicable. So overseas tour program purchase, 5%. 5% up to 10,000 and above 20%, above 10 lakh. Up to 10 lakh, it will be 5%. Okay, so these are the various TCS rates are there. So you have to simply remember that flat 20% is available for TCS above 10 lakh. Okay, TCS above 10 lakh rupees. So 20% is normal and 5% for education. And if education loan is available, then half percent. So this you have to remember. Then you can easily clear the question if anything coming from here. Okay, so example is also here. That is uh, TCS. This suppose you wish to invest 13 lakh in foreign asset and approach a money transfer agency for the same. So in this case, 20% tax TCS on foreign remittance will be applicable on the amount exceeding rupees 10 lakh. So that is 3 lakh. So 3 lakh is the exceeding amount. So money transfer will collect 60,000 extra. 20% of 3 lakh, that is 60,000. So what will happen in this transaction? That because you are sending 13 lakh rupees, so up to 10 lakh, there is no tax. So above 10, that is 3 lakh rupees. On 3 lakh, bank, what they will do, they will collect TCS 60,000 rupees. And total you have to pay 13 lakh 60,000 rupees. So once you make the payment, so your 13 lakh will be transferred, 13 lakh will be transferred, and your 60,000 will transfer in your PAN in income tax, which can be claimed back also if you are eligible. So inward remittance, receiving money from account. So generally not taxable. Money received in India as a gift or personal transfer from abroad is not taxed unless it is a income like salary, consultancy fee, in which case it is taxed as per the receipt income tax slab. So reporting and compliance. So Form 15 CA CB for outward remittance, the remittance remitter must submit Form 15 CA and Form 15 CB certified by CA to the income tax department. So whenever you are making any payment from the NRO account, okay, whenever you are making payment from NRO account, so Form 15 CA is required and 15 CA CB is required. Form 50 CA is nothing; it is a declaration. 15 CA is a declaration on income tax website. And 15 CB is the CA certificate that whatever declaration is there, that is correct. And if you are making any like business transaction, outward payment other than like import, outward payment you are making for purchase of something like any consultancy fee or any exhibition fee. So in that also 15 CACB is required for making the payment by the companies. Okay, documentation. Proper documentation and compliance with RBI and income tax rules are mandatory to avoid the penalty. So some misconceptions are there that will see TCS is an extra tax. So what is the fact? The fact is that TCS is tax collected at source, is not an additional tax. Tax. It is an advanced tax collected by bank on outward remittance, and you can claim TCS as a credit or refund when filing your ITR. So what is happening? Suppose your annual income is 7 lakh rupees, and you have made some, you have done some like foreign remittance of 20 lakh. So up to 10 lakh, no tax was there, and on 10 lakh, tax was there. So if 20% tax is taken, means 2 lakh rupees tax is taken by the bank, TCS. Okay. And it is deposited in your PAN. So now when you're filing the ITR and your annual income is 7 lakh rupees, Okay, but you have sent 20 lakh rupees, but 7 lakh rupees means you fall in the nil tax like category. Nil tax is available for you. So this whatever the 2 lakh rupees is available in your PAN account, so that will be refunded by the IT. Okay, it will be refunded by the income tax department to your account because it's not a income, it's just a correction of the tax, like a advance tax. Okay, all remittances are taxable. Fact. Only specific remittances, such as income or gift from non-relative above 50,000 may be taxable. So personal transfer, gift from relative or remittance for education or medical are generally exempt or attract low tax. So TCS applies to NRIs sending money to India. TCS under LRS applies to resident Indian sending money abroad, not to NRI remitting fund. So for NRI, what will happen? They will have the wealth tax. Mostly the NRI, whatever the income they are getting from India, in that wealth tax is collected, which is at 30%. And if they're selling any property, so in that when they're selling the property, that time also they have to pay this wealth tax kind of thing, and that is the tax applied to them. So TDS and TCS are same. So the fact is TDS, tax deducted at source, is deducted by the payer on certain payment like salary, while TCS is collected by bank on outward remittance. So both are adjustable against your tax liability. So no form needed if remittance is not taxable. So most outward remittance require 15 CACB even if it's not taxable for compliance and tracking by income tax. And it is compulsory for non-resident Indians. Okay. And mostly from NRO account transaction. So TCS can be refunded. So fact that is TCS is fully adjustable if your final tax liability is less than the TCS. Like already I told you in the example. So it's about that. So now we have some FAQs on 15CA. So many candidates are having a lot of query that what is this form 15CA? So in this, as per section 195, every person making a payment to non-resident, not being a company or a foreign company, shall deduct TDS if such sum is chargeable to income tax and details are required to be furnished in form 15CA. So they will give the declaration that this amount is what is the purpose and all that you have to submit in income tax website. And a responsible person for making such remittance has to submit the form 15CA before remitting. This form can be submitted both online and offline. So in certain cases, chartered accountant certificate in 15CB is required before uploading the form 15CA. Okay. So which part of 15CA you need to fill? So there are four parts are there. Part A, Part B, Part C, and Part D. So what happened? Part A is that where remittance does not exceed 5 lakh. If your remittance is not exceeding 5 lakh during financial year, then you have to file Part A. Okay. When remittance or aggregate of such remittance exceed 5 lakh during the financial year, so then you have to do Part B. And when the remittance or aggregate of such remittance exceed 5 lakh during financial year and a certificate in form 15CB from an accountant has been obtained, then Part C. And Part D, where the remittance is not chargeable. Because some cases will be there where the remittance is not chargeable, but you have to file 15CA, so you will be filing Part D. Okay, who is required? So as per rule 37BB, any person responsible for paying to a non-resident, not being a company or to a foreign company, shall furnish such information. Is it mandatory to submit? So no, it's not mandatory to submit. But Form 15CB is an event-based form filled only when the remittance or aggregate of remittance exceeding 5 lakh during a financial year. Can 15CA be withdrawn? Yes, within 7 days. Okay, within 7 days, it can be withdrawn also. And when is Form 15CA not required to be furnished? So when remittance is made by individual and does not require prior approval of RBI, remittance is of the nature specified under relevant purpose code. And how do I e-verify Form 15 CB? So that it can be e-verified using DSC or EVC, and you need to e-verify using this. If DSC is registered, so that you can do, and you can refer to the IT site. So can I file Form 15C online only? When should I file this form? So this can be filed online also and offline also, depending on the services you are obtaining. So we are at the conclusion that foreign remittance tax ensure compliance, transparency in overseas transfer. So whether you're sending money abroad for studies, medical expenses, travel, or investment, knowing the latest TCS rate and exemptions can help you save money, avoid penalties, and claim refund easily. So this is all about the guidelines on taxation and TDS. Okay. So I hope so this topic is clear to you. So if it is clear to you, you can easily score 2 to 3 marks in the exam. And thank you, friends. Thanks for watching. Have a nice day.